Hi, I'm Ed Tomlinson, investment consultant for Aon, and today I'm going to give you an update on investment markets and some thoughts for future returns. Well, another month and another interest rate cut announced. So far across 2019, there's been more than 30 interest rate cuts around the world. This chart shows how rates for key economies have been changing over the past 10 years. The analysis shows that Australia and New Zealand have joined a low interest rate party that much of the world has enjoyed for some time. The recent downward moves in rates can generally be explained as actions to address the signs of slowing global economic growth. The benefits of investors for these moves have been threefold. Bond returns have been strong as interest rate expectations have fallen sharply. Shares in companies with dividend growth prospects have outperformed, and the signs of the global economic slowdown have not worsened, and this risk seems to be pushed into the future. The Aon KiwiSaver Scheme funds that have performed the strongest have had a heavy focus on shares and listed properties. The ANZ Balance Fund is one such fund, and their performance has been very strong this year compared to other similar balance funds. All of our managers are active investors, and they regularly make changes while searching for their performance edge. A couple of recent changes that come to mind include Nikko's switch from cash to global bonds to target higher income, ANZ adding infrastructure that can offer a very long-term, stable income stream. And both Russell and Milford have been adjusting their exposure to shares but in different ways. Russell has increased its exposure to strategies which should outperform when markets are volatile, while Milford has been moving in and out of shares, avoiding risk and seizing opportunities. While it is great that our investment performance this year has been strong, it's worth considering if good returns are achievable in the future. For this, I'll focus on three global risks that we are watching carefully. It's our expectation that proactive central banks can support economic growth, and the next few quarters will be informative for our view. News of further tariffs and nationalism have the potential to damage confidence and disrupt trade. So far this reporting season, company earnings news has been mixed, and improvements in the future might be needed to support share prices. Remember, achieving a good return requires a long time horizon and exposure to some risk. What you need to make sure of is that you're in the right fund for the level of risk you're prepared to take. Our online risk profiler can help you understand your attitude to risk and help you determine which funds might be right for you. You can find this really useful tool on our website, aonkiwisaver.co.nz.